Good afternoon, my dear students. This is SS2 financial accounting. If you remember, in our last class, I gave you the format of how to prepare the profit of an organization when you are given 2 years assets and liabilities. But now I want to illustrate it with an example. The example, the question is in your textbook, but I will send you the page in your textbook later. But this is the illustration one now being solved for you. That's Raphael PLC. Now, you have 2 years there in the question. You have 1st January 1991 and 31st December 1991. That's a whole year assets and liabilities given to you. Then how do you get the net profit of Raphael without stressing yourself? You start with the SOA for the first, which will give you the opening capital. How do you get it? You start with the fixed assets. You have a fixed assets there, plant and machinery, 2721, furniture, 248. Add this together, that will give you 2,969. Then under the current assets also, you have the stock, 1926, debtors, 1,242, bills receivable, 130, cash at bank, 457, then cash in hand. Add this together with the fixed assets value here, that will give you 6,760. You can see, as I said earlier, you start with the fixed assets, bring them out, then from there, fixed assets plus current assets here will give you 6,760. Now to the left-hand side of the SOA, you start here with current liabilities. You now subtract, you can see here now we have here creditors, 3,602. You now subtract this from the formation of the assets here. That will give you the opening capital. Mind you, this capital is derived because we are subtracting the current liabilities from the total of the assets. You can see here that the assets here, we have 6760 minus this, we give you the opening capital, which we have derived here. Then in doing this, what we have just done here is preparing what is called SOA in short. That's Statement of Affairs, SOA, as at 1st January. Here now, we have derived what Raphael has as at 1st January is capital by adding the assets together, subtracting it from the liabilities. That will give you the opening capital. Then you now go ahead now and also prepare the SOA for 31st December, the same year. So I just cancel the figures, then slot in the figures we have there for 31st December. That will give you our closing capital. So please go along with me. You can see me canceling the figures there. Everything we cancel but the same figure, the same assets are still there. So I'm now slotting the figures for the 31st December. For plant and machinery, we have 3,050. For furniture, we have 261. Then for stock, 2,851. Then debtors, 2,197. Then bills receivable, 324. Then cash at bank, 110. Then cash in hand, 30. Add this together, that will give you 8,823. 8,823 here. That's the total of all the assets, fixed and current assets. Like I said here now, I will also change the date. to 31st December. Mind you, the first one we did was for the opening capital. Now we are on closing capital. This is 31st December 1991. Then here now we have the closing capital here, which we also derive. Closing capital. Then also, this figure will change here and total here. The figure here for the last day of the year is 4,200. So how do you now derive the closing capital? Is by subtracting this figure from the total of the assets here. Mind you, total assets here is 8823. So subtract the figure here from this. That will give you the closing capital, which is 4,623. 4623. So you can see how we derive the closing capital. It's by taking all the assets together, adding them together. You start with the fixed assets, which is 33311. Add it to the current assets. Eventually, you have it as 8,823. Subtract the current liabilities here. Mind you, in some questions, you may have more than one here, but in this question, you have only one liability here, which is the creditor. So subtract this from this. That will give you your closing capital. Then, mind you, you must balance your figure. This is 8,823. So what we have done here now, we have derived also the closing capital. Then we now go ahead now and now calculate the profit for Mr. Raphael. So we now go ahead now and do that. So let's go ahead. Now, on this side of the board, I want to explain how we calculated Mr. Raphael profit. It's on the board. You can see there, calculation of profit. The same thing you do. The title will come first, Raphael. So now you can see here, closing capital. This is the format which you must go through with. The format is a closing capital, add drawings. These two together will give you 4,873. Then you now subtract the closing capital, the opening one, which we got earlier from it, will give you net profit. But at times, it may be a loss. That is, when these two addition is less than the opening capital, that will be lost. But for Mr. Raphael here, you can see is a profit because the addition of the closing plus drawings, this is what we got. Then subtracted from the opening capital, and we got 1,750. You can see how we got the net profit. We have not gone through the TP&L because this is another method of getting your net profit without much stress. So I said earlier, I'll give you the question is in your textbook, but I will send it to you. That's the page and the question. So please, thank you for bearing with me. In our next class, we now go to where you prepare your trading account, P&L, the sales and purchases. Thank you. God bless you.